Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An immediate countering bearish engulfing pattern and bearish opening black Marobozo yesterday. This offset with a vengeance the previous session's key reversal up by punching down through the April 2020 low at 107.25 and into free territory until the 2020 low at 106.35. The sine wave activity of this market since the start of the year seems, or at least seemed, to be reaching a trough, though there might still be room on the downside to breach the 2020 low at 106.35 or even down to the April 2017 low at 105.68, which had previously managed so well to slow the decline and turn the market back up in late February and early March. The only issue of this is that this time we have not just the short medium moving average overhead, currently at 108.87, but also the medium moving average this time, currently at 108.11. On the converse side, we have below the long moving average, currently at 105.01, rising up into the frame, moving up through the February and March low from 2017 at 104.92. This low also helped back in February and March, as well as the start of January, where it was particularly effective. Overall, there is the possibility of a February to date bull channel here, but it is still very early on in this idea, so I've not detailed it in any definitive way as yet. So far today, not much, a little weaker, but really not much to talk about yet. We're well within yesterday's range and looking like an indecisive spinning top right now. Cable, aka sterling against the US dollar. A hanging man pattern yesterday after the previous session's key reversal up. The market still seemed to be entangled with the slowly rising short medium moving average, currently 124.31. Below, we still have the combination of the now ever so slowly rising medium moving average, currently at 122.97, and the 50% Fibonacci line of the June 2021 to September 22 move at 123.16. As I said yesterday, this topside did look a little susceptible right now. Overall, the market has finished its move up from the February to early March descending wedge pattern and is now in the zone between the previously mentioned medium moving average and 50% Fibonacci support combination below, and the combination overhead of the September 2020 low at 126.72 and the 50% Fibonacci line of the June 2016 to September 2022. I've got to stop saying 2012. The September 2022 move at 126.99. There's also the possibility of a bull channel here, as in euro-dollar, but it is less distinct. So far today, a small move higher, but then a seemingly small reaction move back down below the short-medium moving average. We're looking like a small, indecisive, spinning top doji cross right now. Euro-sterling, a fourth bearish black crow yesterday, not only a continued follow-on lower to last Friday's bearish below the stomach pattern, but also a significant move down yesterday. The market punched down through and closed below both the lower bear channel line, currently at 86.23, of the early April to date bear channel, which is currently at 87.78 to 86.23, but also the March 2022 to date uptrend, currently at 86.18. As I said yesterday about this uptrend, it was not that strong a support. However, the market did halt at the 85.80 zone, a region which, as I also said yesterday, and I quote, "Instead, I would look for closes and lows from October, November, and December last year, down around 85.80 as perhaps being a better region of support," end of quote. This support stretches down to just under 85.50. Yesterday was also the lowest low and low close since December last year. Looking below the support zone, we next have the next support at the April 2021 low at 84.70. So far today, a small reactionary move back up, looking like a nascent immediate countering bullish thrusting pattern. Possibly a tweezer top on the bottom, but that's still early. Please be aware the breached uptrend and the breached lower bearish channel line are now resistances. US dollar against the Indian rupee. A second bullish white soldier yesterday, though I would hardly call it a follow-on or an endorsement of the previous session's bullish engulfing pattern and bullish opening white Marobozo, which in its turn I'd rated yesterday as an overreaction to the prior session's indecisive spinning top. The main feature on my daily chart is not the October 2022 to January 2023 mildly bearish shift pitchfork, highlighted in green, which the market's having difficulties in pushing up over the upper time, currently at 82.57. Nor is it the ascending triangle formed between January to March, highlighted in dark blue, in which the market's having difficulties in interpreting. No, it is not that either. It is last week's bow tie formation of the short moving average, currently 82.49, short medium moving average, currently 82.17, and medium moving average, currently 82.18. This triple crossover pattern sets up the opportunity for a move higher as the moving averages went in and out of the bow tie in the right order and are mainly pointing higher. Additionally, the theory indicates that between 20 to 25 sessions after the crossover, we may see a move in the direction of the bow tie as a result. Thus, between the 20th to the 27th of June, look out for such a move. At the moment, the top side is capped by the extension of the upper trend line of the ascending triangle, currently at 82.96, with the October 2022 high 83.26 as resistance beyond that. Meanwhile, below, well, the upper time of the mildly bearish shift pitchfork provides immediate support of some form, and the coincidence of the short, medium, and medium moving average seems a suitable support further down. So far today, well, a strong reactionary move lower, below the upper time and the short moving average, currently 82.49, but slowing and halting upon approach to the combination of short, medium, and medium moving averages. Below these two rising moving averages, we next have the long moving average, currently 81.91. US dollar against the Brazilian real, a third bullish white soldier yesterday, but do not read into this that the action is necessarily bullish, as the pattern itself yesterday was a shooting star pattern. The question now is whether it was a type 1 bearish or a type 2 bullish pattern. My personal thoughts are that it is more a type 1 bearish than a type 2. The base of the action was on the descending short medium moving average, currently at 503.30, as the market shot up through the lesser Fibonacci lines at 505.73 and 507.39, as well as the flatlining medium moving average, currently 509.77, the significant 38.2% Fibonacci line of the June 2019 to May 2020 move at 510.87, and even penetrated the upper time, currently at 511.71 of the broken late July to late September 2022 bearish shift pitchfork. Now this pitchfork is highlighted in dark blue on my daily chart. However, the market could not sustain the move higher and dropped down through all those levels, finishing right on the lesser Fibonacci line at 505.73 and above the declining short medium moving average. This action did not affect the other main pattern here, other than the bearish pitchfork, of course, and that was the November 2022 to date bear channel, currently at 483.62 to 532.12, which is highlighted in bright red on my daily chart. Even now, after all this time, still sitting over all of this is still the shadow of the monthly key reversal down we saw in January. US dollar against the Mexican peso. A second bullish white soldier yesterday and a follow-on higher from the previous session's bullish engulfing pattern. But really, in reality, it was a somewhat higher indecisive spinning top. What was most interesting about the session's action was how prices managed to rise and penetrate the neckline, currently at 1771.37, of the February to April 2021 head and shoulders top, but then dropped back down and closed below it. This neckline has been running as a bearish declining support since March, only recently seemingly converted to being a bearish declining resistance. Further up, we have the declining short medium moving average, currently at 1797.12 as the next resistance. Meanwhile below, we have support at the August 2017 low at 1756.93 and the July 2017 low at 1743.62. Further down, we have congestion at the March 2016 low at 1709.23 and the April 2016 low at 1703.89. However, the key to all that has been going on and highlighted in dark blue on my daily chart is still the September 2022 to date bear channel, currently 1733.32 to 1853.12. This bear channel has acted superbly in showing the way lower. So far today, a small attempt higher, and we are seeing here the neckline once again acting as resistance, causing prices to halt, occasionally drop back, and possibly make an indecisive spinning top, maybe a doji cross pattern right now.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.